Okay, so welcome to the February 2025 housing market update. I'm going to quick run you through a lot of statistical information pertaining to the housing market, both nationally and locally. We're going to also be talking about Passaic County market stats as well, because we just opened an office in Ringwood, New Jersey, which we're very excited about. Congratulations to everybody who is joining that office. We're going to kind of start wide and then we're going to narrow down. Two articles that I thought kind of captured my analysis of the market in 2025. And these are kind of predictions for 2025. So this is from U.S. U.S. News and World Report. Sales of existing homes will grow moderately as buyers become accustomed to higher prices and mortgage rates, but transactions could surge if rates decline. However, I'm not reading now, I'm just talking. I don't think it's that likely that rates are going to decline all that much in 2025. So I think the first part of that sentence is the likely scenario, moderate growth. I'm going to skip over this one because it's not really that relevant to the general public, but newly built homes, I think also is a key part to the story, will continue to fill the supply gaps created by a lack of existing home inventory. That is true. We even see locally here more new units coming into the marketplace, which is a good thing. And then it says here mortgage rates will likely range from 6 to 7% unless there's a recession. But short-term lending rates will continue falling through 2026. I agree with that. I think that the Fed is going to continue to cut rates. But remember, when the Fed cuts the short-term lending rates, it doesn't necessarily translate into lower rates for mortgages for home buyers. Okay. So that's one opinion there. I want to take a look at this here because JP Morgan also has similar things to say, but different. JP Morgan research experts expect house prices to rise by about 3% overall in 2025. So that's a few percentage points lower than what we've seen in 2024 and a bunch of percentage points lower than what we saw in the last 3 years prior to that. They're projecting, they being JP Morgan, for higher for longer interest rate backdrop is here to stay, with mortgage rates expected to ease only slightly to 6.7% by year end. So they're not thinking that rates are going to come down all that much really from where we are right now. So, and I think everybody agrees that, and I think it says it here that by and far the thing that has the most impact on rates is by and large, the thing that impacts the housing market the most in the current time right now is interest rates. That is really what it's coming down to. I also wanted to share this. I think this is relevant and interesting that multifamily construction starts and completions starts are way down, meaning that permits for new multifamily construction have decreased significantly. Things that are under construction are also on the decline, right? Starts are down, construction is down. However, of course, people are finishing up what they already have. So that's interesting that investors are pulling back from continuing to construct multifamily units. Just interesting information. So let's take a look at locally where we're at. Let's start with Passaic County. And we just have January numbers lined up here year over year. And really, like, the most important thing right now is what's going on with new listings and what's going on with sold transactions. So when you look at just raw data, new listings were up pretty substantially in the month of January in Passaic County, 212 versus 186. So that's a good increase. In fact, that was even more than what was in 2023. When you go back even further, you start to see that there were a lot more listings in 16 through 19 and 20, but 212 is a pretty good number. So we'll keep track on that and see where things go throughout the year. Units sold, no increase from last year. A little bit of a tick up from 2023, but significantly down from other years as well. So, that's the bad news for us that are in the industry, right? Making money off of transactions, whether you be a realtor, a mortgage lender, home inspector, attorney, so on and so forth. Let's flip over to Sussex County and take a look at new listings. They're up there as well, which is also good news, right? Because we need more inventory. That's really the whole problem. The interest rate issue, it's holding people back from listing their homes because if they sell and they have a 2.5%, 3% mortgage, they have to come out of that and get into a 7% mortgage. So people are staying longer, hence the reason for the lack of inventory. So that happened in Sussex County in January, a little bit of an uptick. Sussex actually had a pretty good uptick in terms of the units sold, number of transactions, higher than 24 or 23, but lower than 22. So trending in the right direction, but still not where we ultimately want it to be. And then let's just flip over to Orange County as well, too, so that we can get some perspective there in New York. New listings was up just a tick, one more listing than the year before. But both 24 and 25 were up from 23. So again, we're headed in the right direction. It's a slow crawl right now, but we're not out of the woods yet, Units sold down in Orange County from where we were in 25. But again, it was just the first month of the year. So that's what's going on locally. I think that in the end, what I would say is that here's my summary after analyzing all the different data. I think that in the end, 2025 is going to have a slightly better transaction count than 2024. The units sold is going to be slightly better than that of 24, which is good because it means it's not continuing to slide. Before we can start to see an increase in the market, we have to see it stabilize and plateau. It's just always been the history of how the housing market works. We've been on basically a 3-year slide. The last slide lasted 8 years. So hopefully this one only lasted 3. Hopefully. I also agree that mortgage rates are only going to be slightly better at the end of the year, if maybe even. I don't see much change in the mortgage rates. But I also do think that prices are going to continue to increase, but at less of a percentage. And at the end of the day, what's going to continue to push the real estate housing market forward? The 5 Ds of real estate: diamonds, diapers, divorce, downsizing, and death, right? Those are just 5 things that happen in our society on a natural basis. And those are always going to cause transactions to happen. So as we kind of return to normalcy, we're going to start to see the market, just naturally shift as a result of those 5 things. So that's it for this month. Thanks for listening in. We'll check in next month in March.